Welcome back. Here's a look at where markets ended a volatile week. Strong third-quarter earnings and an upbeat outlook from NVIDIA was not enough to sustain a rally by the close on Thursday. Neither was a much better than expected September jobs report, which showed 119,000 jobs added to the economy for the month. There are more doubts now of a Federal Reserve rate cut in December. Joining me now to talk more about it is Crossmark Global Investments CEO and CIO Bob Dahl. Bob, great to see you. Thank you so much for being here. And I think it was really interesting what we saw happen this week, because it was very much a strong market until around the close on Thursday, complete reversal on this worry about a rate cut. Then Friday happens, and you hear from New York President John Williams, who said, oh, no, we can cut rates in December. Where are you on the Fed and on these markets going into year end, Bob?
I think the change in the probability of a Fed cut by the Fed fund futures curve tells us everything. It's all over the place. It's been a roller coaster. No one knows. Look, as you pointed out, this past week, we got a lot of good news. The NVIDIA earnings were off the charts. Walmart had great numbers. The jobs number was good, but the market is saying, at 20-some times earnings, maybe not so much, especially if the Fed's not going to cut rates. I think the Fed probably will not cut rates because of legitimate concerns about the inflation rate, but we'll see.
Well, I mean, look, when you look at the backdrop in terms of earnings and what you heard this quarter and this revolution that we're looking at with AI, does that make this time different? I know those are famous words, and it's you don't want to necessarily believe any time is different. But, Bob, aren't we in a moment in time here where there's an enormous amount of money going into AI, and that is holding things up to a fair amount?
Yes, yes, and yes, but the market knows all of that. That's why it was selling at its peak 23 times earnings. And that means the world has to be nearly perfect, which means earnings have to keep going up, AI continues to happen, and the Fed needs to keep cutting rates. And if we doubt any of those three things, and we're now doubting the last one, the market takes a pause. So
how do you want to allocate capital going into year end, Bob?
Carefully. Look, Thanksgiving week is seasonally a very strong week. Let's see if that happens, what the underlying tone and breadth of the market is. If it's good, probably means we've got some more good news in the month of December. If we can't hold on to any kind of rally, that's not good news. So I'd be balanced in my portfolio. Now, that's a bit of a cop-out, but I wouldn't be a hero either way.
Well, I mean, then you've got Black Friday, the day after Thanksgiving, supposed to be usually a very strong day in terms of shopping. Are we going to see that kind of activity this year?
I think we will. And the bulls say, yeah, that's great news. That's going to mean more earnings for the retailers and others. The bears say, yeah, but they're going to be selling all their stuff at a big discount to move the inventory. The jury's out. Look, I think the economy is still in reasonably good shape, but it is slowing.
Well, you've got these ideas that things are slowing and maybe the Fed doesn't cut in December at a time of really eye-popping valuations. I mean, I don't know if NVIDIA trading at what? It was at 28, 29 times earnings is considered excessive, but I look at a company that's valued at close to $5 trillion, and I'm thinking, wow, what do you need to do in terms of growth to meet $5 trillion valuation, Bob?
Yeah, high 20s, low 30s for NVIDIA is not an excessive valuation. Compare that to the dot-com bubble, where a lot of the companies, Maria, as you know, didn't have earnings. Here we have legitimate revenues, legitimate earnings, legitimate cash flow, but the valuation for the market overall is just on the high side. Things have to be nearly perfect. The world is in pretty good shape. And look, post-January 1st, the big, beautiful bill is going to mean more money in consumers' pockets. The capital expenditure expensing for much of CapEx is going to be good for corporations. So we have some tailwinds coming in the new year.
Oh, great point on that. That's right. Next year, we'll see the impact of all those tax changes, like no tax on tips and no tax on Social Security. Bob, it's great to have you this weekend. Thanks so much.
Happy Thanksgiving.
Have a wonderful Thanksgiving, Bob Dahl.